Hey folks, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Wednesday, November 20th. We're going to take a look at Paysafe today. So we haven't checked in on old Paysafe since about March of 2024. Chart's been holding up well. Just to sort of recap what's been going on with the levels that we have. A double bottom put in here around this 975 level, and then came down, sort of a reconfirm here, and then just push after push after push. Topped itself out all the way up at 26.25, leading up to earnings, which in hindsight for some folks might feel like a bit of an unfortunate event unless you got out, because obviously things got pretty dicey afterward, with seemingly, from what I can tell, investors not feeling as though that huge increase in the price per share was warranted based on what came out of earnings. Some mixed info here on earnings. Some of them basically saying that it was on par, unchanged, not changing future forecasts, so on and so forth. Some of them saying, payments and volume have slipped. But in any case, being that the focus here is the chart, what this says to me is there was this huge anticipation run up into earnings, and then, whether it was on par, just a smidge good, or was actually a little bit negative, doesn't really matter. The reaction from the investors seems to have been that increase in the price per share was not warranted, and it way overpriced in what could have come out of earnings. So to me, that's the takeaway. Now, you would have seen, as I was giving that little rant there, I was putting an uptrend line here. We do see it sort of developed here around this 925 level. That's where it confirmed off of on that push. And then as it had significant dips as it was leading up to that approach into the mid-teens and then through the 20s, that's where that sort of initiated from. So interestingly, we see that's about where it's situated, banging off of that level, which if you're a Paysafe bull or if you're looking for some stabilization, that's exactly where you'd want to see it sort of ram into from a chart support and resistance level perspective. So slipped through a bunch of these levels, right? Lost the 2064. Didn't put up much of a fight around that 1848 that we had. Hasn't come down to the 1548 down here yet, but did make contact and seemingly, as of now at least, is bouncing off of that uptrend support. So could it dip a little bit below it and still sort of quickly regain it and, have that collectively be a net win for stabilizing and catching it? Yes. So I only say that just to mention, sometimes people freak out if it starts to slip. I don't have a particular example here at the moment, but, if it just dips a little bit below, it could certainly do this and then sort of a quick recovery up and then kind of carry on its way. That's obviously very different than a dip below and just either continuous free fall, or a dip below and then a reject off of it and then coming back down. Or even just getting distance from it by falling through and then moving relatively sideways, right? Just sort of perpetually getting more and more space between it and consolidating out and down below the uptrend support. Me just saying that from a stabilization or from a bullish perspective, that's not what you'd want to see. But right now it's doing what you'd want to see on a on a situation where it does fall 25% in a day, and then needs to find some bastion of support, right? That's exactly where you'd want it to bang off of. I will put it in a couple of additional levels. I don't think it'll clutter the chart too much because we have some decent levels and we had a lot of space there as it was. This is sort of a gap fill level. Yeah, I think probably the stronger level is here, but just to mention, there's this gap fill level at 1592 that would happen. I think that was the high this day. So if it's sort of gunning for that, right, maybe that's where it sort of situates itself to complete the gap fill. I don't know. It may not matter at all. But these are the nearest in levels that I would sort of add into the chart at the moment. There's another one. This will make more sense when we zoom in here in a moment. Yeah. So now it's getting, on the on the end of cluttered, but I think that these are sort of a good map for the moment. So if it does bounce off of this uptrend support and then essentially starts putting in a series of ascending triangles, 1716, 1788, 1848, and then 19 is what I'd be looking for. And then we have a big gap, which we could always come in and sort of take care of if we need to. If it does slip the uptrend support and seemingly loses that, 1618, 1548, and then should actually throw in something here in case it does get a little slippery and we don't check it in on it super quickly. I would go here, 1473, and what's this guy looking like? Splitting hairs a little bit here, but we're going to put in the level. We might as well put in the right level. 1406. All right. So yeah, if it slips through, that slip through 1618 brings us to 1548, 1473, 1406, and then 1327. And, again, looking for any signs of consolidation, stabilization, compression along any of those lines, or, just a clear bounce off of it, right? It could be like a quick bounce like you sort of see here or here. Right, where it sort of comes down, a couple candles are put in and it jets, as opposed to something like this, right, where it sort of consolidates along that level and then moves on its merry way. If we take a look at the EMAs, this might not be that compelling. Yeah, I mean, it slipped the 183, which is this gray one here, which is, to me, would be the most critical piece of the puzzle. It's way up at 1925 at the moment. Obviously, that's going to move with where the price is and as additional candles get put in. But I would pay attention if it does show signs of moving off of that uptrend support, right? It would have a ways to go percentage-wise to get to that 183 again. But if it does show signs of wanting to continue to build motion off of that uptrend support and hold that, I would be really curious to see what it does at that 183. Do we get a rejection there? If so, the rejection off of the 183 EMA might sort of dominate the ability for this yellow uptrend support line to hold, but that would, obviously that would come into play in the future, but just something to maybe sort of be aware of that you could store in the back of your mind if and when it, even becomes a thing. But all these short-term EMAs, obviously, in bearish formation at the moment, sort of what you would expect. So to me, that 183 is sort of the interesting component there. Now, on the Thinkorswim side of things, we do see it was out of the upper bound of the channel. It only got itself to this initial level, right? It didn't stretch the full +1 ATR level, and then with the drawdown, it slipped under this put trigger, which is this sort of yellowish line, and now is trying to find support again off of this initial level here. If it does stretch to the full -1 ATR level, we're looking at 1392. So that would obviously be a lot of additional pain, and that would be through just the end of November. And then these are the December levels that we would get into. But we'll see. It may be able to sort of stabilize itself along here. It's initially at least showing want to attempt to have support there. We see it wicking off of that level here and then sort of a reconfirm here. So the question is going to be, is this going to be sort of a quick double bottom that maybe gives a little push, or even just a quick double bottom that sort of results in some stabilization and sort of gets it into the mid-range, right? If it stayed along this line here and got into December, it would be coming in about mid-range, which is where it spends a lot of time, obviously, right? Like this whole period where it was just kind of in compression it was just batting itself a little bit above and a little bit below the mid-range of the ATR levels. So That said, phase oscillator at the moment, dipping pretty negative, getting quite low actually. I think we're down nearing the minus 100 mark. Just keep in mind, it doesn't mean that buyers have to or will step in. And same thing when it's sort of, seemingly very high on the oscillator up above 100 here. It did pull back into it, right? But it wasn't because the oscillator was high. It was because of the earnings reaction. And it, sort of bouncing off of this initial ATR level here. So something to sort of keep in mind, that it is getting kind of low, but that doesn't necessarily mean anything. It's sort of like a breadcrumb of a factor to mix in with these other things. But there's potential here, like I said, for support along this level. What that means, I don't know, in the sense of, is it just going to sort of work itself sideways through here, or is it going to get any lift? I don't know. But it is interesting that that's sort of coinciding with this uptrend support level, which, like I said, if you're looking for it to catch anywhere from a support and resistance level, when you get such a plummet like this, that's what you want it to do. That's why you have these sort of longer trend uptrend support lines, right? This would have initiated in November of 2023. So over a year ago, this would have initiated, and it would have confirmed about a year ago, right? December of 2023. And so this long-term uptrend support is what you'd want to see it sort of catching or working off of if it does have something that resembles free fall status, if you will. All right, folks, so I hope that you have a happy hump day. And as always, I appreciate you watching, and I will see you in the next video.